What's up everybody, Tom here with another video. In today's video, we'll be discussing our top-down analysis for the markets for the week ahead, including the key levels that you need to be looking at for the SP 500, Nasdaq, Tesla, Apple, Bitcoin, and more. Everyone seems confused about what's going on right now, and rightfully so, but are we getting mixed messages? And what can we do to cut through that and get the key levels? Stay tuned to find out more. All right, guys, well, this begins our market recap for, of course, the markets closed the 24th of September, 2021. And what a day or what a week it was. We had bullish, bearish, and all in between. It was kind of difficult to navigate the markets if you weren't looking at the indices. Let's now take a look, though, at the heat map here of the market closed on the Friday and just get a bit of a lie of the land. So if we take a look at everything here, you'll notice the Tesla was moving up. Congratulations, guys. As we've been bullish recently on Tesla, I'm incredibly happy with that close, and so should you be. We had a little bit of a bounce back in Facebook, and Nvidia was down through the session. Let's just quickly put a week in performance here so we can see it straight away. And you'll notice that a lot of the FANG stocks were actually flat to down. And this is this thing that we'll be looking at this week. Remember, what the FANG stocks tell us is really the market health, because realistically, if the FANG are coming down, then the rest of the market could be turning over. Financials did well off, of course, the Fed and FOMC, and Tesla 1.96 on the market movement. Let's take a look at the Friday session just to gain a better understanding of what Wall Street did. They sold it initially, especially the Nasdaq, and IWM came down pretty heavily. The Nasdaq overall had an amazing looking trade on it. We'll be talking about that soon and how you could have found that key level. We'd certainly been talking about it. And then by the end of the day, it pretty much ended flat and ended really around the same level as it closed. So there was a little bit of a shake up in the morning, probably trapping a bunch of options for the expiration point. We had IBB down 1.97%. That's the biotech sector. Another one that's been doing well recently, XLRE, the real estate sector. And then we had healthcare, and the rest kind of just above. So nothing to note too much there other than defensives were on the way out through the session. We also saw a fairly large uptick in put-call ratios, as in more puts were open through the day, and this is in response to that sell-off early in the morning. Remember that what the futures did was a little bit of a different tale to what ended up happening. Let's now take a look at the markets, and we're going to start here with the SPY. We're going to start with the SP 500, talk about some options expirations, talk about our expectations for the week ahead, and then we'll get into some other stocks, and then of course wrap it back round into the Nasdaq and the SP 500 and the key news. So I want to start here on the SPY. And the reason we start here is because we're at a really big crossroads. You can see a red line here and a blue line. And if you're not sure what they are, they're the 50 exponential moving average, the blue line, and the 20 exponential moving average, the red line. And we're kind of caught in a pincer movement between those zones. And this is really, if the bears want to actually regain any strength in the market here, they've got to do it right here. We saw volume pick up, which is very normal during a period of a bit of a bear bust. We hit the 430, which is exactly where we expected it to buy off because of the options expirations. Check out last week's video. You'll see we talked about the 430 puts there, and it actually closed pretty well. So 446 and 450 were the big call expirations for the Friday session, and it closed underneath both of those. So we're stuck in this middle of the range, and we'll come back to this in a minute. But basically this 50 moving exponential average has been a very key point, and the 20 is always like that mean reversion. So once you're above both of these, what are you doing? You're looking really to make new all-time highs. If you're below this, there's still a chance that the bears try to take control. And the only way you can really see whether the bears are trying to take control is by taking a look at the options. Just before that, we want to look at the weekly close for the SPX as well. And you'll notice it did bounce off the weekly 20 exponential. This is the biggest and most common pullback zone that we've seen since the pandemic. You'll notice 1, 2, 3, 4 pickups have happened off this zone. So yeah, if you were a bull here, I don't blame you. We talked about the bullish intentions of the market coming through there. We talked about be nimble, be quick. And then this week will be the real tester of whether we are going down during that October period. Let's find out in a second. We'll start off here with the options. So this is the options expiring the 1st of October, so this Friday. And what you'll notice is there's a bunch of puts here, and then there's a bunch of calls. And there are two big call strikes. So there's the standard 450 call strike or around that level, which has been very common. A lot of retail traders love the round numbers, so they've been buying 450. And I think it's around 443 or something like that, or 440. You could look at options on Yahoo and check that out. But basically, there's a bunch of calls sitting around here. So if you're looking at this and you're thinking, where is maximum pain? And what maximum pain means is the most amount of money that Wall Street could make. Somewhere in this area, actually slightly bearish this week, would be the best area for them to options expire. That would basically be maximum profit, the best kind of scenario. And of course, they would not want it underneath 420. That would be very, very bad. They wouldn't want to pay those out. So somewhere in this zone is what we're thinking about for a range. And it's a good thing to look at for the start of the week. If you're interested in getting this data, you can jump into the description below, 7-day free trial, come into our Discord, our private Discord community, and you can grab all of this for your favorite stocks or favorite indices. Let's take a look now at the 15th of October, and you'll notice here's where things start to play out a little bit strangely. There's a lot of 450 calls. In fact, compared to the puts, you could pay all these puts off and still be doing better from expiring this call worthless. So you'll notice there's a little bit of calls as well against the puts. So the puts are the red one, the calls are the green one. And basically there's a bunch of calls that are floating around this level, around that 450, 446, 440, etc. coming into October. So if we are going to see weakness based on our analysis into November as well, it has to kind of happen now, or it's going to happen a lot later, because this is the expiration points. This is the most likely place that they don't want to pay out. Another thing that's interesting here is the 10-year. So we've been watching the 10-year for a while. It didn't do anything, and then it closed above in the Thursday session. So we actually saw that 10-year start to bounce out. Now this is in anticipation and after the FOMC event. And basically here we have a downward trend line, a great consolidation, and a movement up in the 10-year. Now, even if the 10-year comes back down and tests this 1.374, it looks like the 10-year has been allowed to go free now. This is basically a full recovery. We've got a closure above. You guys can see it's great structure here and things are looking a lot better for the 10-year. So if the 10-year rises, what happens? People start to get concerned about inflation again. And if they get concerned about inflation, what pressure does this put on? It generally puts a downward pressure on the US 100, so the Nasdaq. So we saw that play out on the Friday morning. Initially, the US 10-year actually ended up going up, yet the Nasdaq initially also ran up. So if this continues to spike higher, remember it will put some downward pressure on the Nasdaq and in turn the FANG, pushing down some of the markets. So we'll get into a couple of the stocks to be watching this week. One of them is Tesla. Tesla broke out above the 760. And I want to give you guys a clap because holy moly, this thing's doing it. Look at this beautiful closure. Congratulations to Tesla. If you're a Tesla holder, put the comments down below because you've done well recently. This has been a pretty good couple of weeks. We've seen incredible strength coming out of Tesla, barely down in line with the market. We've got a great trend line in the future that we can continue to extrapolate out for support. And now that we're above, well, we hit the 775. Of course, that was our first take profit. You can see I haven't moved it here. This is exactly where we always projected the line. I think there's more in store for Tesla though. This is a huge closeout and we talked about getting above a few levels. So we've gotten above this zone, the previous weekly pin bar rejection. That's no doubt a scary looking candle, but see how it was a fake out. It's an absolute fake out by the market. They've kind of done it before. And this is very common in the market. And you can't be scared by one candle. You've got to see the follow through. So in this case, we're actually above. We've closed multiple weeks now above any of the previous resistances. And I'm thinking Tesla's still going to move up here. It's looking like that 800 becomes open and possibly even the all-time highs because the price action is strong. And this will have a lot of people talking about it in Wall Street bets, in stock tweets. We know this is pushed a lot by retail. And let me just bring a case in point here. So here's the expiration coming up for the week ahead. Now, I don't know who was doing this, but the entirety of the last 2 weeks, we have seen huge amounts of puts. Now, if it's Michael Burry, it's Michael Burry. I don't know if it's Blurry himself or somebody else, but my goodness, 720, 700, 690, the put wall. This is what we call the put wall. Basically, this area here is where the market will not most likely expire for the week ahead because who the hell wants to pay these out? Wall Street certainly doesn't. you'll notice that there's a decent amount at 800, and this is probably going to be the thing to watch. I would expect retail to start pumping this call up. And as we watch it this week, and remember, subscribe if you're interested in this, I think that 800 strike, 850 strike and 900 strikes and 880s, etc., will start to really ramp up for the week ahead expiration. So we need to be watching that one. But huge amounts of puts in comparison to calls, which allows it to go up. If we then get into October, things become a lot more random. So this is the 15th of October. So we might actually see a short, sharp burst followed by a bit of a pullback and consolidation. Why? Because look at this, a much evener spread of puts and calls for the 15th of October, a little while away. We've got calls all over the place at 760, at 780, 800, and then we've got a bunch of puts all over these levels as well. So this will be something that continuously changes, and we'll keep watching it to get a bit of an understanding with the technical analysis. Let's move over to Apple. Apple actually is doing nothing. So it's very consolidatory behind this level, and we'll talk about the FANG soon. You want to know what Apple's doing. We talked about Apple weakening here with the upward trend line being broken against, and then of course it ended up getting stuffed up. It moved down to the 141, 142 zone, which we expected buying. It filled the gap, and now it's hovering around this 147 area. And again, we can go to options to get a bit of an understanding. This zone here is where support becomes resistance. And if we close above, then we move back to that 150, close above 150. Of course, 155 becomes the key level we look at. But let's move over to the options for the week ahead. This is where things get really interesting. Take a look at this. A lot of bullish options set to expire for this week. Now, this is nothing. It's going to, again, be evolving situation per day. But we have a lot of options sitting around that 150, 150 level, 153, 150 to 160 zone. So all around here is where all the bullish intentions are. Very little bear pressure on the puts. And when you have less puts and you have more calls, what does that potentially incentivize Wall Street to do? Small little dip. Again, something we'll be looking for in the price action. We move over to the FANG to get an understanding of what the rest of the bigger stocks are doing in the tech. 20 moving average has been an incredible bullish pickup. If you're looking for investment zones, that's been a great investment zone for dollar cost averaging and other methods that you may use. And what a phenomenal mean reversion it has been. If you're looking for further weakness and you really want to be a bear in this market, it's actually very hard for you to really turn bearish until the FANG gets underneath here. We know the FANG rules the market in many ways, and unless it gets underneath this 5150 on the FANG index, I don't believe that the market can weaken. So that would be like a peak, a trough, a lower peak, and then a lower trough and underneath. At that point, yes, the bears have control. You'll also be hitting underneath SPY at key levels. You'll hit massive key levels like 14,800 on the Nasdaq, and all of these levels will tip over. But until that happens, really, it still looks incredibly bullish. We're at a resistance coming into the Monday session, so this is again in line with maybe some weakness that we could see coming through here. We've got SPY at resistance. We've got the FANG at resistance. We've got Apple at resistance. We don't have Tesla at resistance, but we have all the rest. So Tesla might go do its own thing like other stocks can. And then these are going to come into this really big pressure point. See here, the 20 moving average right into that resistance straight away. Let's take a look at IWM. It had a bit of a poor session, long leg doji showing indecision. So another market that doesn't really show us much distance. If we get above 225, expectation is 230 for the IWM Russell 2000. If we close below the long leg doji, I feel like we could even get under 220, and at the same time, we'd see weakness through the other markets, so we'd start to come underneath 220, 225, 230, and then underneath 220, we're talking probably about that 210 zone. So keep watching. This is an evolving situation. We'll check it out. Nasdaq. Now, this is where we can actually trap the market up really well. This is the futures market, so the US 100 futures. Support, support, support. We knew it was going to become resistance. We were very accurate on this as a community last week. Fantastic work, guys. We also knew there'd probably be some weakness on the Friday session. There was. The futures market came down to the perfect buy, sell kind of level. We have here the 15,200 zone. Support once, support against, beautiful engulfing candle, rallies into the close. If you ended up taking profit, I don't blame you. If we close above this level, what are we looking at? we're looking at, of course, a movement back to the resistance over here. I'll put that line down for you guys so you can see it, because these are very clean levels this week. So we've got about that 15,545 zone. And if we end up getting underneath 15.2, well, you can start to really think about being bearish again. At this point, you got 15,000, 14.8. So every 200-ish points seems to be pretty important here. 15.2, spot to watch, 15,000, 14.8, and then of course these two resistances. We're in a bit of a channel, so if it breaks the range, what do we expect it to do? We really expect it to go the distance, and the distance will extrapolate off. See how it's beautiful? Look at that, right in. That means it's proofing into the market as well. Fantastic stuff here on the Nasdaq. I'm excited for the week ahead. Let's take a look at where it ended. It ended at resistance. Again, we expect this. This is the QQQ, just to give you an idea of the real market here. And it goes straight into the 20 moving average, the mean reversion, a fantastic level. We know we're in a bit of a trap range here. This is the QQQ again. There's the trap between the two zones. And if it closes either way, we've got a trade. If it stays within the range, we've got opportunities on the smaller time frames. I think it's been great in indices. Let us know in the comments down below if you've been doing okay in indices as well, because it's some pretty nice stuff that we're seeing here on the charts. Let's move over to Bitcoin. Now, this is where things get convoluted. This would be a market that I would trade less technically and more investably, if you want to say that's a thing. There has been some good ones like Cardano, which we detailed, and we'll take a look at it in a second. But Bitcoin, after the Chinese ban news for the 20,000th time, has taken a dive, and it's come down. It's bounced off this previous body close here. This is the importance of body closes, and it is absolutely confused. Daily is horrible. We've got like a 20, a 50, a 200 all sitting there, acting as resistance in terms of dynamic. This is not what we really want. I mean, what do you guys think? Oh my goodness, this Bitcoin chart is not cool. Then we have Ethereum. Ethereum's about to get across for the first time for a long time of the 2050 on the daily. You'll notice here the 3200 is too much for it at this stage. And then we've got that 26 into 24 support. So it's like 26, 24, and then 1700. I don't know if it gets down underneath those, but it'll be one that we have to keep watching. And for the bull side, if you end up getting above this, it is great. That is a fantastic sign. Imagine how strong that would be. Above 32, and we've got trough, peak, higher trough, bam through, lightning bolt, fantastic. But at this point, neutralized on how I feel about this. Cardano was a little bit better. If we go down to the 2-hour chart, you'll notice some good pickups here. If people were able to pick up this level around the previous resistance, there was a great trade there up into the previous support. Fantastic work. And then a few people probably also grabbed that again and took it off near around these highs. So if you've been in Cardano, I think that's been a lot easier to trade, but now it's becoming convoluted again. We're getting back down to that 220 support, 218 support. If it cracks under there again and gets especially under 2, then it really could be in free fall. So be careful in these markets, be nimble, be quick. It's all the same stuff we always talk about. So let's now take a look at the week in terms of news. What's going on? Well, we scroll through and there's some news around the world. FOMC people speaking. We've got Fed Chair Powell speaking on Wednesday, 11:45 a.m. New York time. That'll be an interesting event, though Powell really just says the same kind of things all the time, but the market obviously moves into his events and moves afterwards. And then we've got the US Core PCE Price Index coming out at 8:30 a.m. on Friday, and ISM Manufacturing PMI at 10 a.m. on Friday. Look, is this stuff all important? Yes. Is this the big news of the week? Oh, look, it may move it. I think Wall Street's left to their own devices, so they're going to try to manipulate the market for their best intentions. This will mean that we need to look at options. We obviously need to also watch these stock indices, and I think stock indices is, again, the place to be at. It's just fantastic trading right now. Great ranges, stuck within zones, being fast and nimble is paying off, and that's the type of stuff we want to look at. I also want to remind long-term investors, they might think, oh, Tom, you're being bearish on the market or whatever. Hey, I'm being neutrally biased here. I'm always bullish on the market. You've got to have optimism. The stats don't lie, and here they are again. We had 7 months. In fact, I think it was 7 months of bullish intentions on the SP500. Every month, bullish, 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 bullish. That leads to generally a month of bearishness to maybe month and a half. and then we come back strong. And I think this market will, even if you don't agree with me. Statistics stand up, and it says 93% of the time we will get a strong market in the next 6 months, and we'll have an average return of around 8%. So it's pretty strong numbers here coming through. Remember, it pays to be an optimist in the markets. Being bearish, you got to be fast, you got to be quick, but that's trading, isn't it? Be fast, be quick, be trading, and then of course have your investment account as well. Thanks so much, everybody. We hope you enjoyed this video, and if you did, please remember subscribe, smash that like button, guys, and let us know all of the things you're looking at this week in the comments down below. See you in the live stream 1 hour before the New York Open. Bye for now.